Hey everyone, when we look at a trading chart, we usually just focus on those squiggly lines going up and down, right? The price. But what if there was something else? Something deeper, a kind of heartbeat for the market? Well, today we're talking all about volume, and I promise it's going to completely change how you look at a trend. Let's get into it. Okay, so picture this. You're watching an asset and the price is just skyrocketing. It looks amazing. Your first thought is probably, this is it, time to jump in. But hold on. What if I told you that sometimes a rising price is actually a warning sign? It really brings up a critical question, doesn't it? Is a chart that's going up always good news? Take a look at these two charts. At first glance, they look exactly the same. Both are climbing, both look super positive. But one of them is basically lying to you. Over on the left, you've got a healthy, confident trend. The price is going up, and the volume is going up with it. That's the market screaming, yes, we believe in this move. But on the right, well, that's where the problem is. The price is rising, but the volume, the participation, is just fading away. That's a huge red flag that the smart money is getting bored, and this whole thing might be about to fall apart. This is the secret language we're gonna learn to speak. So what is volume, really? Simply put, it's the total number of shares or contracts or coins that get traded during a specific time. You can think of it like counting the crowd at a concert. It tells you how many people are actually showing up and getting involved in whatever the price is doing. Is the party packed or is it empty? And this brings us to the most important idea of this whole explainer. If you remember one thing, make it this. Volume is the market's heartbeat. A strong, steady beat, that means you've got a healthy trend. But a weak, fluttery, or erratic beat, that's your warning sign. Learning to feel this pulse gives you a massive advantage. So how do we read it? It's actually pretty simple. A strong, healthy trend is when price and volume move together, in sync. They're on the same page. But a weak trend, that's when the price is doing one thing and the volume is doing another. When you see that price ticking up, but the volume is dropping off, that's a major warning sign. It's kind of like a party where the music's getting louder, but you notice everyone is quietly slipping out the back door. Something's not right. And here is where volume is an absolute game changer. Breakouts. When a price finally smashes through a key level it's been stuck under. But is it a real, legit breakout, or is it just a trap? Volume is your litmus test. A breakout that happens with a huge surge in volume, oh yeah, that's the real deal. It's got power behind it. But a breakout on weak, pathetic volume? Be careful. That's what we call a fake out, and it's designed to suck you in right before the price comes crashing back down. Volume also helps us find the market's battlegrounds. Whenever you see a price level where a ton of trading has happened in the past, you need to pay attention. A price floor with really high volume, that's a support zone. Buyers have drawn a line in the sand there and are ready to defend it. And a price ceiling with tons of volume, that's a resistance zone, where sellers are all lined up, ready to push the price back down. These are the key areas where the big fights happen. So does everybody use volume the same way? Not even close. If you're a day trader, you're glued to the screen, watching for those sudden spikes in volume to scalp a quick profit or catch a fast reversal. But if you're a long-term investor, you're looking at the big picture. You're using volume on weekly charts to confirm that a major trend has enough fuel in the tank to last for months. Same tool, totally different ways of using it. And once you get the basics, there's a whole toolkit of advanced indicators that traders use. Things like on-balance volume, or OBV, which keeps a running total of buying versus selling pressure. It can give you an early warning when a trend is losing steam, even if the price still looks good. We're not diving deep into these today, but just know that they're out there when you're ready to take the next step. Okay, this is so important. Volume is powerful, for sure, but it is not a crystal ball. You can't use it by itself. It's a confirmation tool. The smart way to trade always follows 3 simple steps. First, look at the price. What's the story the price chart is telling you? Step 2, check the volume. Does the market's heartbeat agree with that story? And step 3, and this is the one that's absolutely non-negotiable, always use proper risk management. And that's a wrap. Look, a price chart without volume is like trying to watch a movie on mute. You see the action, but you're missing the emotion, the power, the real story. So the next time you pull up a chart, don't just look at it. Try to listen. Listen for that pulse. And the real question is, what's it telling you?